Are you torn between investing in index funds or buy-to-let properties? Let's explore both options and help you make an informed decision. Index funds are investment funds that track a specific index. They are a cost-effective way to gain market exposure. On the other hand, buy-to-let is purchasing property to rent it out. This method involves real estate investing with potential rental income. First, let's talk about index funds. They are managed funds that automatically diversify your investment. You buy shares in the fund, and it spreads your money across many companies. Investing in index funds typically has lower fees than actively managed funds. Now, on to buy-to-let properties. Here, you buy real estate, then rent it to tenants. Your income comes from the rent paid each month. Property values can also appreciate over time, giving you potential profit. Next, let's discuss liquidity. Index funds are traded like stocks, meaning you can sell anytime. On the contrary, buy-to-let properties can take time to sell. Now, let's focus on time commitment. Index funds require minimal management after the initial investment. With buy-to-let, you must manage tenants and maintain the property. Legal responsibilities come with buy-to-let, such as safety regulations. Let's consider risk and volatility. Index funds can fluctuate with market conditions but generally grow over time. Buy-to-let properties may rise in value but can also decrease. A sudden economic downturn can lead to vacant properties. So, what about income potential? Index funds offer capital gains and dividends over time. With buy-to-let, there's rental income plus possible price appreciation. However, be mindful of ongoing costs like maintenance and taxes. In short, index funds are simple, low-maintenance investments. Buy-to-let offers potential for consistent rental income and property appreciation. Consider your lifestyle and risk tolerance carefully. If you prefer hands-off investing, index funds might be better. If you're ready for management responsibilities, buy-to-let could work. Ultimately, both options have benefits. Evaluate them based on your goals. Decide to take control of your financial future today. Start exploring your options, research further, and make a plan. Which investment path will you choose? Start today. Are you considering whether to invest in index funds or buy-to-let properties? Let's examine both options to help you make an informed decision. Index funds are investment funds that track a specific index, providing a cost-effective way to gain exposure to the market. They are managed funds that automatically diversify your investment across many companies, typically with lower fees compared to actively managed funds. On the other hand, buy-to-let involves purchasing property to rent out, generating income from monthly rent. This method of real estate investing also has the potential for property value appreciation over time. When it comes to liquidity, index funds can be traded like stocks, allowing you to sell at any time. In contrast, buy-to-let properties can take longer to sell. Index funds require minimal management after your initial investment, whereas buy-to-let properties necessitate active management of tenants and maintenance, alongside legal responsibilities such as adhering to safety regulations. In terms of risk, index funds may fluctuate with market conditions but generally tend to grow over time. Buy-to-let properties can appreciate in value but also risk declining, especially during economic downturns, which can lead to vacant rentals. Regarding income potential, index funds typically generate capital gains and dividends, while buy-to-let investments provide rental income and potential appreciation. However, be aware of ongoing costs like maintenance and taxes with buy-to-let. In summary, index funds are low-maintenance investments, while buy-to-let offers the possibility of steady rental income and property appreciation. Consider your lifestyle and risk tolerance when making your choice. If you prefer a hands-off approach, index funds may be more suitable. If you're prepared to manage a property, buy-to-let could be the right choice. Both options have their advantages, so evaluate them based on your financial goals. Start exploring your options and plan your investment strategy today. Which investment path will you choose? Index funds are investment funds that track specific indexes, providing a cost-effective avenue for market exposure. These funds automatically diversify your investment across multiple companies, generally with lower fees compared to actively managed funds. Conversely, buy-to-let involves purchasing property to rent out, generating income from monthly rent, along with potential property value appreciation over time. In terms of liquidity, index funds can be traded like stocks, allowing for immediate selling, while buy-to-let properties may take longer to sell. After the initial investment, index funds require minimal management, whereas buy-to-let necessitates active engagement in tenant management and property maintenance, including compliance with legal responsibilities like safety regulations. Regarding risk, index funds may experience market fluctuations but typically demonstrate growth over time. Buy-to-let properties have the potential for value appreciation but are also subject to declines, particularly in economic downturns, which can lead to vacant rentals. In terms of income potential, index funds usually yield capital gains and dividends, while buy-to-let investments can produce rental income and potential appreciation. It's important to consider ongoing costs such as maintenance and taxes associated with buy-to-let. In summary, index funds present a low-maintenance investment option, while buy-to-let offers the potential for consistent rental income and property appreciation. Your decision should reflect your lifestyle preferences and risk tolerance. If you favor a hands-off approach, index funds may suit you better. If you're ready for property management, buy-to-let may be appropriate. Evaluate both options in line with your financial goals and begin to strategize your investment journey today. Which investment path will you choose? Like, subscribe, and click the bell so you will never miss an episode.